All right, welcome and good evening, traders. It is Monday, December 4th, 2023. Let's jump into our accounts and a little bit of the market today, but I want to spend a little bit of time on the portfolio and new trades. So we'll get into that. Let's just quickly jump into the markets, take a quick look at where we are on the day. All right, so if we jump in, take a look at SPY, SPX down about 28 points today. So conversely, SPY here down $2.41. If we take a quick look, we had moved up decently on the session and then closed well off our highs. A little bit of a decent tail at the top. Does that mean there's going to be more follow through to the downside tomorrow? Very possibly. If we look at the daily, and we have been talking about this for a while, MACD has just been slowly dwindling while RSI remained overbought. But now maybe finally getting that RSI coming down. We'll see what happens. But decent little pullback today. Came close to the PSAR bearish reversal signal here on the white dot. Didn't quite trigger it. I think tomorrow is a good chance that we could trigger that PSAR reversal signal, and maybe we're going to drop down. Will we come down and fill the gap? Not sure, but coming down to about 441, somewhere between 448, 441 wouldn't be the worst thing in the world, and then maybe another leg up as we maybe get into a Santa rally after Christmas for a week. We're looking at the weekly chart here. MACD still rising. RSI is rising, but with this one down day week, it shows a little bit of a weakness there. But other than that, pretty decent. But is this a double top potentially here? And if we drew a trend line sideways between these, we can see, get a pretty good sense right there that this is a pretty good double top potentially, but it also could be the beginning of a inverted head and shoulders with a left shoulder here, head here, and then if we get any kind of a bounce and resurgence, I think we could be off to the races on the weekly. So I think still pullback night would be perfect here, and then any kind of a rebound back towards this double top if we can break through that. I think 47, 4,800 potentially is doable by the end of the year. So we'll see if that happens, but that's a good opportunity. Here on the Qs, on the triple Qs, MACD, RSI definitely falling on the daily chart here. We've already been in a bearish reversal here for 3 sessions. Now we did finish well off our lows of the session, bouncing up to 21 on the tech stocks. Something to take a look at. But what's happening right now is just a rotation from those big tech stock names into smaller caps right now. So small caps are getting a little bit of the beneficiary of the last several sessions as we've stalled out on SPY, started to tip over on the Qs, on tech stocks, and all of the last 2 sessions here, IWM been heading higher. So it gives us a pretty good move up. Now, we are a little bit overbought, but it doesn't mean we can't crank our way a bit higher here. I'm going to extend these lines over a bit more so we get a sense of where's the top of this channel. We'll see what happens here, but we've definitely broken the downtrends. I can remove these. Bounced off of support here, and that's been a good support line as well for a while. And we just continue to oscillate inside of this range, but maybe we're heading back now towards the top of that range. Strong MACD, strong RSI, both the daily and the weekly. IWM small caps look really strong here. I think definitely we could be heading back to that, the upper 190s, maybe 200 range up in here. VIX on the session, pretty much unchanged, up just a fraction, 45 cents here. VIX just still down at 13, pretty dead. On the session, though, the US dollar, though, did rise on the session, so pretty good move up on the session today as the dollar has now had, a couple of decent sessions moving up. You've got MACD reversing higher and RSI moving higher. So all of the shorting and all of the move down on the dollar seems to starting to halt here a little bit, and maybe getting a little bit of strength back on the dollar. And on the 10-year, we're just really sideways consolidating on the rates. We're at 4.29 essentially on the rate after today, and a decent up day on rates, which also means TLT down on the session. And also, if you take a quick look at TMF in here as well, I believe this thing is reverse, splitting as well. So something to consider. Let me double check on that. Make sure I am, 100% on exactly those noise. But it has announced a 1-for-10 reverse stock split. So usually never good. But on these leveraged ETFs, down is always the move on these. So a reverse split here on it. And I think that hit today, right? Because I think they announced it last month on November 23rd. And I think that takes effect in here. So anyway, I'm just double checking timing on it as well, but I believe that would happen, December 4th. So split adjusted basis. So that's where we are here on TMF. The reason these things reverse split is because they're just usually terrible leveraged investments that drive down. Yes, you've run from, essentially on the reverse split 40 to 50. Good little run here, but overall, these things just sell off. I think if you're looking long term, I think TLT is the way to play rates. But if you're short term, TMF might be. But that reverse split usually means it's going to start to leak back down again. Taking a look at Forex, 6A down on the session because the dollar's rising. 6B, the British pound, down on the session. 6C, the Canadian dollar, down on the session. 6E, the euro, down on the session. Bonds, we've already covered. We're pretty much just flat to slightly down on the session today. So you had down bonds on the session because of the rates heading higher. That was the 30-year, also the 10-year, same thing, pretty much identical. Oil on the session did drop on the day. Oil continues to stay in the box. And until such and such a time that it will either break to the upside or the downside, we just continue to watch rates in here. Now, we are right at this previous support level, which has been a previous pivot level. We have bounced off it once already. Can we do that again on oil? We'll see. MACD and RSI have been heading lower. We are looking at a squeeze as well here on the chart. So we are in a daily squeeze on oil, and a squeeze on a downtrending stock could mean that a break to the downside is imminent or very, very likely. However, I don't know how much further oil can go down, especially if U.S. warships or shipping starting to get attacked in the Red Sea. You got OPEC agreeing for the most part on production cuts, trying to keep prices moving, but you're heading into a potential recession in the U.S., a little bit of a slowdown in the economy, which could be hurting oil. We'll see what happens, but overall, you remain in this downtrend, and this has not changed. So the narrative has not changed, and you're in this box here of slight volatility up and down from 73 to 79, 73 to 79. We just keep oscillating back and forth. We are at the bottom here. We'll see if we can get some kind of a bounce overall. If we look at the weekly, still in a bearish trend down here. So oil still looks down in a squeeze. Can we get a breakout to the downside? Potentially. We'll see. That would actually be somewhat decent for our positions, but not too bad. Gold on the session scared the pants off of a bunch of people today. Overnight, gold rocketed up, I think, like 50 points in the overnight session last night. Opening still up on the day and then just dwindling down, and gold finishing lower on the session. Now it's bouncing a bit in after hours right now, but gold, pretty good down day. just a crazy day on gold. A little bit of a uh, little bit of a gap here to fill. We didn't get to it, but you got MACD rolling over. You got RSI heading lower, and that kind of goes against the weekly where both have been heading higher for a while. We did set, a new all-time high though overnight last night, so we'll tick that up 2152. Nice all-time high. So new highs on gold overnight, and then a pretty significant sell-off. It closed at what, 2050 or so. So about 100-point swing up and down on gold. Crazy volatility. And if we look at gold volatility, it spiked up significantly on Friday and was up a bit today before chilling out. So gold volatility on the rise. It's good. I think right here is a great place to start to look at strangling gold or selling puts or something along those lines. Still very bullish on gold. If we look at the oil volatility, it did also move up today and still remains somewhat elevated. So both of those, two of my favorites to trade, are in good shape and like where we are on both of those. I'm going to start to watch silver a bit as well. It's going to mirror gold quite a bit, but pretty good down day on silver. I think it's had a really nice run here. So a little pullback on gold and silver, totally fine. If we look at copper, pretty much the same thing. All three of those decent looking trades. Lean hogs down on the session today. So livestock down, the lean hogs down, and then live cattle also down. Live cattle continues, heading lower here. This trend line pretty much staying intact here to the downside, and not really even a channel here, just the downside trend continuing lower. Now you got a bearish PSR reversal today, although a 2-day bullish signal and then a 1-day, not a big deal. It did finish at the lows of the day. You are back to oversold. Now, one thing to keep an eye on is if live cattle continues lower, that's fine. If you're taking a look at RSI, so right now RSI was heading lower from this particular oversold to this one here. Okay, so we're looking for divergences in RSI. Well, as it's going lower, RSI has been going lower. Right now, we haven't hit the lower mark. If we start to reverse up on live cattle, maybe this is a bottoming divergence here. But still, right now, just breaking, there's nothing to stop it technically on this chart. You've got the MACD and RSI falling on the weekly. There's just nothing when you're looking to the left. There's not a whole lot of support areas in here. And I don't like to look at previous support as support, but I think if we did something in this area, and let me pull back out just a fraction. If we look at a fib level from maybe this previous low that we reversed at to this high. Okay, where does that put us with any major fib levels? You've got the 50% retracement sitting around 160-ish, and you have this previous support around 161. So that's where I would think you might find some support on this as we go down. We'll see what happens. But for right now, heading lower. And then nat gas, still weak right now. So nat gas still fairly weak, even though MACD is starting to run higher. RSI is heading lower. All right, there's your futures. Let's take a quick look at the sectors for today. Big up sectors would be pharma. So pharma having a great couple sessions. Biotech having a great couple sessions. Regional banks having a great couple sessions. Retail having some great sessions recently. So those are your strong sectors on the day, even real estate up, and healthcare. So a lot of those up. The leading down sectors would be semiconductors, I put the GDX miners on here now. I know it's not a major sector, but I'm going to track it as an ETF here because I'm pretty bullish on the miners going into 2024. So I'm going to start tracking that a bit here. Right now, they're just a bit overbought along with gold. XLK, though, your tech stocks lower, oil lower, as well as communications, energy, utilities, and consumer discretionary, all lower. And if we're looking at the Magnificent Seven, all down today. So Apple down decently, Microsoft down 1.4%, Amazon down 1.5%. However, every single one of these is off of its lows on the session. So if you're looking at any of these charts, I mean, Google gapped down twice now, but they all finished off of their lows. NVIDIA continuing to fall. Are we going to come back into the 400 level on NVIDIA? So it's something that we'll keep an eye on as NVIDIA oscillates back and forth between 400 and 500. And now are we coming all the way back to 400 again? MACD and RSI lower daily, weekly, decent pullback in the works here. This could be a good opportunity at some point on NVIDIA. Tesla is the only one really not finishing well off its lows, finishing close to its lows. And then Netflix still reversed off its lows fractionally, trying to hold on to that. But technical damage is here as RSIs and MACDs are heading lower on nearly every single one of these major tech stocks. And with Meta breaking the 50, Google breaking the 50, NVIDIA breaking the 50, all on the RSI, Tesla about to break the 50. So that's where we are. All right, let's take a quick look at the account today and see how things are faring in the trading account. We ended the day with a 13 delta, pretty much exactly delta neutral, perfect for us. Love where we are, as always, on delta. Theta, nice theta, 1323 on theta, all good, 0.4%. Love where we are. So delta neutral with great theta. I think it's a great recipe for here. We were up slightly on Netlick today. So on Netlick, well, it was up a little bit. We're just off of the all-time highs. BP usage did tick up. We did add a trade as well. I'm going to cover that in just a moment. BP usage is about 71%. 10% of that is in BIL, which means we're about 61%. A little heavy on BP, but I like where we are. On that, no realized gains or losses today. We're still up $2,000 on the year on the month in 2 trading sessions. So that's looking pretty good so far. We are sitting at 101,794. That is our total realized profit for the year so far. So we started the year at 250,000. So we are up about 41% with the month of November to go. We'll see what happens. Could take some losses, could take some wins. Who knows? We'll see what happens on that. And what I want to share quickly is let's just jump into the account quickly. We're sitting pretty nicely on most of our trades here. We've got 112 trades in the trap in oil. So this trap is 1 wide, and oil's a 1,000 multiplier. So right now we're sitting at about a $300 gain of the 1,000 max. So I'm not going to do anything on that. We've also got a couple more 112s and some naked puts, all doing very, very well here in oil. Strangle here in oil doing fine. ES, we're in good shape. And what I wanted to do here is I'm going to give you one of the trades that I just put on today. So I'm going to hit the Analyze tab. Let's just jump in. And we're going to just look at the bear trap trade. Now, bear trap trade is a trade that I've been doing for quite a while. We've been doing it in the Mr. Toptic service, I don't know, 4 or 5 years or more. This was the precursor to the 111 and 112 trades. You can notice that the shape is identical. This is what we were doing prior to moving to ES. We were doing this in SPX, the bear trap trade. And essentially what that trade entails, and you can do it with puts and calls either way. It's got a put spread that's a little bit higher up here. that we've sold. We've sold a put here with a short below, so we have a put debit spread that's 5 wide up top, and that's the 43.50, or sorry, 45.30, 45.25. So it's a put debit spread, which is also financed by a put credit spread. This one happens to be 50 wide. So when we do it on SPX, I typically do about 30 wide on SPX, but doing on ES here, this gave me a pretty good opportunity. So here's where we are on this particular trade. Sorry, I'm moving it around quite a bit on you here. So this is where we sit on this particular trade that we put on. So we're sitting up here at the 46.18 level. We've got downside here of about 200 points, which is not a giant cushion, but this is only a 17-day trade. So the bear traps that we do here, which is, again, the 112 is a bear trap. It's just using just using different nomenclature, and we're only using the 2 naked puts as opposed to a put spread. So instead of a put credit spread, the 112 and the 111, those were derived from this trade originally. So this was the original on it, the bear trap trade, which was, again, using SPX, but we would use you could use a call debit spread or a put debit spread. Either one would work, financed by a wider credit spread. So you have a debit spread, 5 wide, financed by a wide put credit spread down here. And again, same type of shape. You've got a tail up here in the bear trap, and then you've got the trap down here. This is why we came up with the name bear trap. That's why we use the word traps here, because this is exactly what we had created years and years and years ago. So as we start to move down here, as long as it's not a significantly rapid descent, if we're going to finish in the tail here, on this particular trade, the margin on this was about 3,600. So we would make 288 bucks divided by, again, 3,600. This is about an 8% trade if we stay up in the tail in 17 days. Pretty good little profit. And then if you happen to drop down here, get into the trap at all in those 17 days, you can go up to 5x more from profit. So anyway, I wanted to show that to you as well today, so you get a chance to see what the bear trap trade is. Again, this is the precursor to the 111, the 112, all those trades. This is how we traded it. We like it as a short-term trade, then we started getting longer and longer. But I think these work best around 17 to 20, 21 days. That's really where I think the sweet spot is on the bear trap trades. All right, so there's where we are there. We've got gold bouncing a little bit in after hours here. We've got our LE strangle, which is the most painful one right now, but it's only down 127%. And then we have a 112 trade on, which has taken some early heat on here. It's all good. We've only had this on for a couple, for 2 days or something like that. So I'm not too worried about this particular trade right now, but I like where we are. A little funky here. Ignore Tasty Works or Tasty Trade here. But we're sitting upside. We're still sitting in the trap. If we fall down into the trap here at all on live cattle, this thing will pay off nicely for us. So we're sitting on a trade that originally might generate $1,100 in the tail. But if we fall in the trap, almost $4,000. We've only been in this trade for 4 days since last week, but both of those getting some pressure. Everything else doing well, and we'll see how things pan out. Anyway, there you go. There's the bear trap trade. There's a little bit about what we're doing in here. You can see that same shape continues to just pop up a little bit of everywhere as you look through it. So that's, we love that bear trap shape that we are able to put on, and gives us some really good trade opportunities that if markets go with us to the upside, we have no risk. If we go downside a bit, we still are in great shape. And if we go downside a little bit more, we really start to pay off. And you'll see this T+0 line start to inch up, but we've got one on in bonds here as well. So this bond one's doing decently as well. All right, so there you go. There's where we are on the trades. Had a good day today. Net lick went up. Haven't closed anything out. Added a new bear trap trade. You guys stay safe. Enjoy it. If you like this video, please click the like button down below. Helps us reach more people. Go ahead and subscribe if you are not a YouTube subscriber. And if you want to see what we're doing in the Discord, check out the bear trap trades. We've got the original bear trap. We've got the 111, the 112, the LT 112s. We've got strangles going on. We've got the 1122 trades, all kinds of stuff to help you guys out. And we're up 41% on the year so far with a whole month to go. Hopefully we can put that thing into overdrive and crank it a little bit more. All right, you guys take care. Have a great rest of your evening. Stay safe out there, and we'll see you in the markets. Take care. Bye-bye.